We are in conversation with the Banking Secretary, Mr. Vivek Joshi, and he has given us time, after quite some time, onto him in terms of trying to figure out what has been the bank performance so far and what's the outlook forward. Thank you so much for giving us time, sir.
So thank you for having me in your channel. So as you know, the profit of public sector for the last financial year has been more than 1 lakh crore rupees. Now this year in 3 quarters, we have already achieved 0.98 lakh crores of profit in the 3 quarters. So the expectation is that we will breach whatever we have achieved last year, and this year we might go up to 1.3 lakh crore. That is the expectation, that is the aspirations.
Okay. And that would basically, so far I think the increase has been 40% year on year. So that's how you might end up in the current financial year towards the end.
That's what we are aspiring, and this is on a conservative side, I would say, 1.3 lakh
crores. Okay. What's the outlook for FY25, if I may ask, at the moment?
So for FY25, we may go with the same numbers or approximately same numbers, but I feel that there may be challenges. It also depends on the various global factors. As you know, the life has become very uncertain. We depend a lot on the global geopolitical situation. So what unfolds depends. But considering that the conditions remain as they are, we would have the similar kind of run next year.
Okay, point taken, sir. But in terms of the challenges, could it be more in terms of banks raising funds from the markets? Because if it's a fallout of geopolitical situation or anything domestic, that you may have in the mind, but may or may not materialize.
So banks have already raised, this year they have been able to raise till now around 43,000 crore from the open market with the use of their QIP 81 bonds and combination T2 bonds. And before that they raised around 45,000 crore from the market. Similarly, we expect them to raise in next financial year also.
Okay. So these are numbers as of first 9 odd months for the current financial year.
Right.
Okay. So last quarter also there could be some more fundraising. I mean, where do you see this number settling on a very broad basis?
So on a very broad basis, they can go up to around between 60 to 65,000
crores.
Yes.
And you expect as of now the same trend to continue next financial year? Okay. Okay. Sir, also the question arises that, it's almost a dream run for the banks as of now, for the public sector banks. Why has the government not taken any call to sell, some small government equities in your banks? Many of them, they have a shareholding above 75%. So can you explain the rationale and the logic?
So you see that if you look at the public sector banks, we have on one end of the spectrum, we have SBI, which has around 56% holding by the government. And then on the other extreme, we have IOB, Indian Overseas Bank, UCO Bank, or Bank of India, whereby the shareholding of the government is more than 95% or so. Then banks are allowed by the government from time to time to offload the equity and raise money from the capital market. So that has been the thinking till now, because as per SEBI regulations, they are supposed to maintain this 75% at most that shareholding by the government, for which we take exemption from the Department of Economic Affairs.
So that one I think will remain till August 2025, the current exemption that's there for a few months more.
Yes.
So if there's any change at heart or change in scene from the government side, that will only unfold post-August.
Yes.
Okay, okay. So you mentioned some challenges could be there for the banking sector for PSBs in the next financial year, in the context of geopolitical situation, not otherwise. But back home, there is a story going on that probably the credit growth rate right now is higher than deposit growth rate, or deposit growth rate is lagging. So are there any concerns as far as the public sector banks are concerned?
So if you look at the deposit growth rate, is around 13%, whereas the advances growth rate is around 16% in the public sector banks. And that has been the case, most of the years. But if you look at the performance of public sector, naturally their CASA is getting affected. So that is a cause of concern in not only in public sector bank, but for the banking system as a whole. I think the reason for that maybe, I'm not sure, is something to be studied, is that people are moving their savings from, banks to maybe mutual fund, etc. So that is the reason, and that is the, I think, biggest challenge for the banks in the coming days or coming quarters, which I could see.
Anything that you would like to do at your end to kind of, reverse the trend, so to speak, or at least to stabilize the trend, so to speak? And, we have been broadly given to understand that PSBs themselves have lost around almost close to 2% of CASA, in the sense, that proportion has come down to overall deposits in the last one odd year. Would those numbers be right? Could you just shed some light on that as well?
So PSBs, they are losing their they are losing their CASA as compared to private sector banks. You can say that more rapidly, especially in terms of the new accounts which are being opened in the country. More new accounts are opened in the private sector banks as compared to the public sector banks. For that, we have been asking or nudging the public sector banks to move outward, meet more people, and do campaign for getting more CASA deposits, become more customer friendly, and more use of IT and better call centers, better services for the customers.
In the outreach to customers,
yes,
basically.
Outreach to the customers. I think there is more.
Okay. What about the interest rate play? Obviously PSBs they do offer slightly lower rates traditionally than the private sector banks. But any play on interest rates here, like we have seen SBI raise once and then, probably not again. So anything on that?
Interest rate, I don't
to attract
think it is. It will be fair on my part to comment on interest rates.
And plus that does not impact your CASA that much.
It's a competitive world, and most of the time, it is governed with how does the monetary policy unfolds. That has a very strong linkage with that. And yes, as you said, public sector banks' interest rates are maybe slightly lesser. Depends on the product. It also depends on the individuals who is asking for the loan, their CIBIL score. So it depends on many factors,
Right, sir. So before moving on, just one more question. Is there any concern in terms of the NIMs also of public sector banks, or they are more or less reasonable at the moment? Going forward, you will see this as a bit of a concern, or not really, so to speak?
It may become a concern, if the rates come down, then it may become a concern for the banks. So there is a pressure on NIM already with the rising cost of deposits, because the cost of deposits are more. The customer prefers to put their money in term deposits rather than in saving accounts. So plus coupled with if there is any change in the rates by the regulator, that may impact.
Okay, but I suppose that will be there for all the banks. That will be there for the entire banking sector. So what are going to be your focus areas going forward, or even currently?
So in public sector banks, we focus One part is very, very important for the DFS is the financial inclusion schemes, all those, the Prime Minister's Jan Dhan scheme, the Prime Minister's Suraksha Bima Yojana, Jeevan Jyoti Yojana. And then the two most important schemes have been launched very recently by the government are this PM Swanidhi, in which we have already covered 76 lakhs of street vendors. And then there is another new scheme called PM Vishwakarma for the artisans. So those are going to be my priorities for the immediate priorities in the coming months. And then the other priorities in terms of overall work to improve the overall work of the public sector is recovery part. You know, in banking system, once we technically write off, once we provide for the NPAs, then that goes out of the balance sheet, but that should not go out of mind of the MDs and top management of the banks. That has been one of my focus areas after I took over.
So what have you done so far?
And in terms of this thing, focus, I have asked the bankers, the top management, to review those cases sincerely and follow up the big cases, big 20 cases. At least the CMDs or the MDs are supposed to do a regular follow-up at their own level and monitor them day to day, their progress on day-to-day basis in NCLT, DRT, or wherever
all the recovery channels.
All the recovery channels.
Surfacey.
Yes. Let me just quote some figures.
Yes.
In public sector banks, last financial year, the recovery was almost 1 lakh crore rupees.
Okay.
And
FY23.
FY23. And in this 9 months, it has been 0.61 lakh crore. So there is a lot of emphasis on this, and we are working in close coordination with the Ministry of Company Affairs and IBBI, the regulator, and we seek their guidance and help in nudging our public sector banks so that they can do a good follow-up. So that is another second priority, I would say. Then third priority, since I took over, is the cyber security of the banks. That's very important. And we have been nudging our public sector banks to improve their cyber security and work in close coordination with the Ministry of Home Affairs, those control centers 1098 created by Ministry of Home Affairs. Okay. And because time is very precious, once a person gets cheated through you, I would request the customers to complain to the MHA's helpline immediately, so that if there is immediate communication and immediate complaint on the MHA's portal, then the banking system can stop the payments to the cheater.
Correct, sir. So very quickly on this front, any particular conversation that you have been having with Reserve Bank of India, and going forward, are we thinking of any regulatory framework for the fintech ecosystem, and especially for loan apps as well?
So we are in constant touch with the RBI and various other stakeholders, including Ministry of IT, Ministry of Home Affairs, and all the key players. And there has been, review meetings at my level. We have been able to identify the various activities which other players will have to take, including the private sector players. And for fintechs, this idea has been floated, but it's more at an idea stage, because when we deal with fintech sector, we have to be slightly careful, not too much regulation, and not, we need to make a fine balance between the innovation and the regulation. So on that, RBI is,
proactive,
working. Yeah.
Okay. Sir, just in this context, I would also like to ask you that, the present, the Paytm situation that has unfolded, RBI has cracked down against Paytm, and, despite earlier reminders also, regulatory gaps have been found. So, where does it leave the government, if at all? Have you got any representation so far? If yes, what's the situation? If not, then, what would your view be?
I won't like to comment much because my minister, the Honorable Finance Minister, has already replied to this question. It was put up to her. And I would kind of repeat what she said. It's a regulatory thing, and in the interest of customers, RBI has taken certain actions on which we would not like to comment.
Right, sir. Right, sir. Thank you so much for giving us time and excellent interaction, and we hope to take this forward again.
Thank you. Thank you so much. Thank you.